Today, we're ranking globally diversified dividend ETFs. Since there are dozens of these funds available on the European market, we're keeping it simple today. We are only focusing on classic dividend ETFs with a fund volume of at least 100 million euros. That means small ETFs and actively managed covered call funds are out. This leaves us with these 12 ETFs. We've already covered many of these in detail in previous videos, so I'll link those down in the description. I'm going to place each ETF into a specific tier and explain exactly why. The higher the rank, the better I think the ETF is. Now, I know not everyone will agree with my ranking, and that's completely fine. After all, this is just my personal opinion, and, as always, not financial advice. All right, let's jump right in. We'll go by fund size, starting with the smallest ETF and working our way up to the absolute biggest. The first one is the UBS S&P Dividend Aristocrats ESG ETF. I'm putting this fund straight into D tier. To be fair, the diversification is great, with a strong focus on Europe, which I actually like. But the stock price has just been moving sideways for years. If you include the dividends, the total return looks a little better. For a dividend ETF, that kind of slow performance isn't unusual. But when it comes to the actual payouts, things get really disappointing. The dividends have been falling year after year. Honestly, this ETF has absolutely nothing to do with real dividend aristocrats. Now, let's look at the Amundi Global Equity Quality Income ETF. This one goes straight into the same D-tier category. For starters, it's relatively expensive, and it uses a swap-based structure. That means it doesn't even buy the physical stocks, but replicates the return synthetically. To be fair, the total return since inception has been pretty solid, but that's really the only positive thing here. Despite being on the market for a very long time, its fund size is barely over 100 million euros and is actually shrinking, which is a major red flag for its future. On top of that, it only pays out once a year in December, and there is absolutely zero dividend growth. Now we're getting into an interesting one, the L&G Global Quality Dividends ETF. We've talked about this one quite a few times before and already found it to be absolutely top tier. Even though it's still very new and lacks historical data, I'm confident enough to put it straight into S tier. This ETF simply delivers everything a dividend investor could look for. You get excellent diversification combined with a strict filter for high-quality companies that actually grow their payouts. The total return of the underlying index was an impressive 10% per year over the last 5 years, which is very solid. And what will make many dividend investors happy is the stable, monthly payout with a projected dividend yield of nearly 4%. Next up is the WisdomTree Global Quality Dividend Growth ETF. I'm placing this one in C tier. So, what's the catch with this ETF? Don't get me wrong, it is undoubtedly a great fund. It holds high-quality companies and behaves a lot like a classic MSCI World Index. In fact, its total return performance is absolutely outstanding. However, in my opinion, this ETF barely has anything to do with real dividend investing. Despite having dividend growth in its name, the actual dividend payouts have dropped significantly over the past few years. The 5-year average dividend yield sits at a meager 1.9%. Last year, the payout dropped to just 1.3%, which is, frankly, a joke. If you want to build up your capital, this ETF is a great choice. But if you are looking for cash flow and dividend income, there are definitely better options out there. Now, let's take a look at the Fidelity Global Quality Income ETF. I'm putting this one into B tier. The structure of this ETF is very similar to the WisdomTree fund, meaning we get a heavy focus on the U.S. market and a large share of tech stocks. Thanks to that tech exposure, the performance so far has been incredibly strong. However, this fund seems to care much more about actual dividends, which I really appreciate. While the dividend yield here is still relatively low, it is significantly higher than what the WisdomTree offers. On top of that, the payout stability is much better here. Overall, I find this ETF very interesting as a long-term investment focused on income. Now for something completely different. Let's talk about the Global X SuperDividend ETF. This is a candidate that, in my opinion, is a total fail. It invests mostly in old economy companies and picks its holdings purely based on the highest dividend yield. It pays out monthly and provides a dividend yield of over 10%, which sounds amazing at first glance. But right here, we see the first big problem. Since the ETF was launched, the actual dividend payouts have been constantly falling. It gets even worse when we look at the performance. The actual fund price performance is negative. That is exactly what happens when you try to maximize the dividend yield at all costs. Companies that pay out such massive dividends usually have terrible stock performance. Personally, I think this dividend ETF is an extreme yield trap that you should probably stay away from. Next up is the Xtrackers STOXX Global Select Dividend 100 Swap ETF. I'm putting this one straight into D tier. What we have here is a relatively expensive swap-based ETF. The asset allocation shown on paper doesn't mean much because the fund doesn't actually buy the physical stocks, but generates its returns through swap agreements instead. Personally, I'm not a big fan of that approach. I want to know exactly what I am putting my money into. Looking at the chart, the fund price has been moving sideways for almost 20 years now. If you include the dividends, the total return does look significantly better. In fact, this swap ETF offers quite decent dividend yields, but the actual payouts are extremely unstable and jump all over the place. I really don't like this trend at all. The physically replicating version of this STOXX ETF looks a bit better, but we will get to that one later. Up next, we have the iShares MSCI World Quality Dividend Advanced ETF. This fund is very similar to the Fidelity ETF, so it goes straight into B tier as well. Here we can see the country and sector allocation. And this is the overall performance. Finally, let's look at the payouts. The dividends are stable and come in slightly higher than the Fidelity Global Income ETF, which I personally really like. This next candidate is the State Street Spider S&P Global Dividend Aristocrats ETF. I'm sorting this one into B tier as well. I think the country and sector allocation here is totally fine, and since most true dividend aristocrats are based in the U.S., a 50% U.S. allocation makes perfect sense. Admittedly, the pure price performance is rather modest, but when you factor in the dividends, the total picture becomes a lot more attractive. What I like most about this ETF, though, are the highly stable payouts. The dividend yield sits around 4%, which is also very respectable. Overall, I find this ETF to be very solid, and apart from the rather weak price performance, there isn't much to complain about. Next up is the iShares STOXX Global Select Dividend 100 ETF. Personally, I'm not a big fan of this fund, so I'm placing it in C tier. While I quite like the country allocation, the sector breakdown is less appealing to me. This ETF invests heavily in financial companies, which, to be fair, have made quite a comeback over the last couple of years. That also explains the excellent price performance the ETF has put up recently. In fact, the long-term total return is actually very respectable. However, in my opinion, a great dividend ETF needs to deliver stable payouts, just like we saw earlier with the SPDR Aristocrats ETF. Unfortunately, the payout stability of this ETF just doesn't convince me. Because of the fluctuating dividends, the heavy cluster risk in the financial sector, and the otherwise modest price performance, I find this dividend ETF to be just average. Let's take a look at another big name, the VanEck Morningstar Developed Markets Dividend Leaders ETF. This is easily one of the best dividend funds on the market, so I'm placing it straight into A tier. This ETF only invests in high-quality dividend companies and offers a very solid country and sector diversification. Here you can see the price trend alongside the total return. It looks incredibly strong. The dividends are also highly impressive. You get a relatively high payout yield combined with stable, growing dividends. Basically, it offers everything a dividend investor could ever want. But why didn't I put the VanEck ETF into S tier like the L and G ETF, you ask? Personally, I find the L and G fund a touch better because it offers much broader diversification, pays out monthly, and is domiciled in Ireland rather than the Netherlands. Our final fund on the list is the most popular of them all, the Vanguard FTSE All-World High Dividend Yield ETF. I'm putting this one straight into A tier as well. Yes, I know, when it comes to pure performance and dividend quality, it can't quite keep up with the VanEck ETF. Yet for me, it remains a top-tier choice. The reason is simple. It is straightforward and brutally well-diversified. Its past performance is actually pretty good for this type of fund, and the dividends are stable and reliable. In my opinion, this Vanguard ETF is the perfect buy and hold forever candidate. All right, now we have ranked all the ETFs. Only the L and G ETF managed to secure a spot in S tier because, in my view, it gets everything right. Sure, it is still very young, and only time will tell if it delivers on its promises, but I am highly confident. Out of all these ETFs, I personally hold these 4 in my own portfolio and have been quite happy with them so far. Do you agree with the ranking, or do you completely disagree with any of my picks? Let me know in the comments below. Don't forget to like and subscribe. Thanks for watching, and I'll see you next time.